Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, August 18th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we see futures. They were kind of mixed overnight. They turned a little positive here this morning. Right now, I'm showing Dow futures up 48, S&P 500 futures up 7, NASDAQ futures up 23. Yesterday, we had a little bit of a volatility in the afternoon after the Fed minutes came out. Fed, of course, wanting to remain hawkish, but also indicating that they'll be data dependent. So the market wasn't quite sure what to do with that yesterday. But again, futures this morning, at least, pointing slightly higher. And we are right now still more than an hour and a half away from the market open. So things can change, but that's where we stand right now. Today, let's go through the agenda. Got a lot of stuff I want to go through today. So let's talk about that first. Going to go through the daily market recap as we always do to start the show. Then we'll jump into talking technically, then industry groups, chart lists, earnings spotlight, and we'll wrap up with the 3 you must see. So got quite a bit there going on, but before we get into any of that, let me take you over to earningsbeats.com. If you go over to earningsbeats.com and scroll down, we do have a free newsletter, which we always encourage everyone to sign up. It's a great way to learn a little bit more about us, and then also hopefully learn a little bit more about the market. All it takes is a name and email address. But I do want to point your attention to this event. This is probably, at least since Market Vision 2022, which was held back in January, I think this is probably the biggest event that we've done this year, and it's a free virtual event, but you do have to register. So it's coming up just a little over a week from now. It's on Saturday, August 27th at 10 a.m. You do need to click on this register now. And when you do, it'll go through and share a lot of things that we've talked about this year, calls that I've made this year, calls I've made in prior years. And I tell you, I got some more calls coming up on August 27th. So you don't want to miss it. It's just something for you to consider. You certainly don't have to agree with me, but I think you'll probably want to be there. Anyhow, just go in, make sure you type in your name, email address, and hit that save my seat button. And we'll see you on the 27th. All right, so let's move on to the daily market recap. I'm going to start off, as we always do, with the major indices. Dow Jones Industrial Average down 171 points. Haven't seen that much of late, but we did have red indices yesterday. S&P 500 down 31. The NASDAQ was down 164. Mid caps down 35. Small caps down 17. On a percentage basis, it was NASDAQ, mid caps, and small caps kind of leading to the downside. Lesser selling on the S&P 500 and the Dow. Of course, I have my own thoughts about that. Many of the Dow stocks are not nearly as heavily traded in options, or at least they're not as volatile. So they don't have as much room to move one way or another with max pain and options expiration this Friday. The S&P 500, you start to get a little bit more of that volatility. So that performed a little worse. And then you get into the NASDAQ, where you have a lot more, at least on a percentage basis, a lot more companies that can swing pretty wildly heading into option expiration Friday and even into the couple of days after, into next week. And so I think part of the problem is that we've had such a big run up. The areas that potentially could be harmed the most by options, because there's so many in the money calls right now. I think, when you look at areas that could be impacted the most, you'd have to say the NASDAQ's one of them. So I'm not surprised that we're seeing a little bit more weakness there. In fact, I've been calling for, if the bears are going to come up with something to try and slow this freight train rally that we've had off the June bottom, options expiration week ought to do it, because there's financial incentive for market makers to move prices lower. So if you can't get a pullback this week or into early next week, I'm not sure how you can count on a rally at any point. But anyhow, that's just the way I see it right now. Looking at the sectors, this kind of lends more credence to what I'm talking about here. Energy. Energy has been one of the weakest groups off of the June bottom. It also bottomed. It was actually in July, and it's rallied, but I mean, we're still sitting, here where we were 2 months ago, and nowhere near the June high, that we saw back beginning of June. So we haven't had as much strength there. So this is what I call opposite George week. Usually the areas of the market that have not done well heading into option expiration week, all of a sudden tend to move up. And the areas that have been leading the charge heading into option expiration week, all of a sudden tend to lose their leadership. So again, if you're a Seinfeld fan, it's opposite George week. And if you're not a Seinfeld fan, go to YouTube and pull that episode up. It's pretty funny. George Costanza is always just down on everything. He's just always miserable about things and very negative, and always makes the wrong decisions, at least according to him. So Jerry Seinfeld, his friend, says, listen, if you're always wrong and you're always making the wrong decision, then just do the opposite of what you're thinking. And so he starts doing the opposite, and all of a sudden things start getting a lot better. It's a pretty funny episode. Anyway, so it's opposite George week. We'll see what happens the rest of the week, but at least for a couple of days, we've seen this rally kind of stall a little bit, and I'm going to talk about that more in just a minute. 10-year Treasury yield. Last thing I looked this morning, not showing it yet on StockCharts, but the 10-year Treasury yield is down 3 basis points, 2.86%. So we are pulling back again, once again, moving back toward the 20-day. It's been this flip-flop above the 20, below the 20. I think right now the 10-year Treasury yield is looking for direction. I think the overall long-term trend has been higher. I think the intermediate trend has been lower, and the short-term trend is just confused, doesn't know which way to go. My guess is that ultimately we're going to go back to the downside and take out this low. I would not be surprised by the end of the year if we see 2.25% on the 10-year Treasury yield. I've said that for a while now. I thought we would have this move up in the 10-year, and then I thought it would come right back down. So while it was moving up, all the growth stocks were getting hit. We were in a cyclical bear market. Now it's coming back down. You're seeing what's happening in equity prices. They're rolling to the upside. I think that's going to continue. We could have a pause, some consolidation along the way. But for those who are looking for the S&P to make this move back all the way back to where we were back in June, well, I wish you luck. I just don't see it happening. Could we move back to maybe 4,000? That's probably about as far as I would see it going back. And I really don't think it's going back that far. I think maybe we get back to 4,100, 41 and a quarter. And then I think we steamroll into the fourth quarter. No, that's just my call. But anyway, this is talking technically. As I look at this chart, I always like to start with the S&P 500 because there's nothing more important than price action. And this is the benchmark. So of course I'm going to start here. I love the action that took place in July, called the bottom in mid-June. And once we came up, went through these moving averages, pulled back, tested the rising 20-day, and took off again. This looks so much like coming out of other prior cyclical bear markets. If you go back and you study history, when you hit that bottom and you break above the 20 and the 50, you go back, you test it once. And if you break back out again, there have only been 3 times in history that I've counted where we've done this, and then we've gone back down to those recent lows. And they were all part of secular bear markets, 1974, 2002, 2008. If you're really bearish and you think that's what we got going here, like I said, best of luck to you. I don't think that's the case. I think we're coming out of a cyclical bear. I think we're in a secular bull, and that means we are going back higher, and we're going to break out the new all-time highs. Don't know if it's going to happen this year. It's going to maybe be close. I would not be shocked if it happens in the fourth quarter. But if it doesn't happen in the fourth quarter, I would almost guarantee, at least in my opinion, I don't like using guarantee, but in my opinion, we go higher. We set a new high at the latest by the first quarter of next year. Now, I've talked a little bit about manipulation. I did a show on Tuesday right here at StockCharts, my Trading Places show. I did a special episode. And if you didn't see it, I want you to go out to Google, and all you have to do is just search Wall Street Thieves. And when you do, this should come up. But if it doesn't, here's the title: How Wall Street Thieves Steal Your Money. What I did is just laid out a case. I did a case study, and it's a recent one, 2022. I went back and looked at the NASDAQ or the QQQ, which tracks the NASDAQ 100. It's an ETF. And what I did is I just broke it down by period of the day, showing you each and every day how the QQQ traded, whether it was down at the open, in the morning, afternoon, into the close, whatever. I broke this down into 4 phases of the bear market and showed you how the QQQ traded in those 4 phases. It's really fascinating. If you haven't had a chance to see that, I would strongly encourage you. If you want to learn a little bit about how Wall Street works and how they literally try to steal your money, this is a great show to watch. It'll probably be maybe 27, 28 minutes of the best minutes of your investing life. You want to check that out. Anyhow, let me show you on a short-term scale a little bit about what I talked about in that video. Because here we were 2 days ago, the QQQs on Monday had closed. Let me get the inspector button. The QQQs had closed at 333.10. Yesterday, we closed at 328.49. So from there, that is $4.61. Let me see if I can, I'm going to write that down over here just so I can remember it. $4.61 drop in the QQQ. Now, at the open, from 333.10 to this or from the close, 333.10, to the open on Tuesday morning, which was 332.06, that's $1.04. Then if we look from the close on Tuesday to the open yesterday, the close on Tuesday was 332.31, and we opened at 329.07. 332.31. So that's $3.01, right? So without looking at anything during the day, the QQQ dropped $1.04 at Tuesday's open and $3.01 at Wednesday's open. That's $4.05. And as I said, over these last 2 days, we've dropped $4.61. Almost 90% of it has been the opening bell. Here we open down and we get a lot of volatility back and forth, but basically we close right where we open. Then we open, we go down, we come up, then we get the 2 p.m. Fed announcement, big move up, big move down, all this volatility driving people crazy. And essentially we closed just a little bit below where we opened. Everything that's taken place the last 2 days, or just about everything, on a net basis has been at the opening bell. That's when prices get manipulated. Market makers benefit from prices going lower. It doesn't matter if you're selling off all day or if it's just a simple little gap down. Lower prices are literally significantly lowering the in-the-money call premium that's out there. Now, and there's a ton of it, and we'd have to go back quite a ways to get rid of all of it. But what I talk about with members when I talk about max pain and option expiration week is that max pain gives us directional clues, not directional guarantees, directional clues. This is the direction that the market needs to go in order for market makers to make more money. It's not like if it keeps going higher, market makers are going to lose money. They're not. They're going to be protected. All that in the money call premium, they've been selling those calls, but they've been turning around and buying the stock. That's a covered call strategy. They're not going to get hurt if prices keep going up. But if they're on the long side with their stock to cover the calls that they've been selling, and they decide to sell those longs and then pile on with shorts, they cash out their longs at the high. They then start shorting prices to move it lower. And then when everybody else is ready to start jumping onto this next leg down in the bear market, quote unquote, which I say somewhat sarcastically because that's what everybody's going to think, and it's not going to happen. But as prices go back down, they make money on the short side. And then what happens to all that premium? The call premium evaporates. So they pay out less in options. It's a win-win-win. Yay for the market makers. Everybody give them a hand. That's the way the financial firms literally steal money legally. There's nothing criminal about it. That's the way our market works. And if you don't understand it, good luck with your options heading into option expiration week. Because if you've noticed that you've got a lot of good calls and options, and all of a sudden you start getting toward expiration and they start, disintegrating, right before your eyes. This isn't anything new. This is what market makers do. So anyhow, I think it's really important to at least recognize what's going on. Again, just these last 2 days, we're down $4.61 on the QQQ. $4.05 of it is literally at 9:30 in the morning, opening bell. Now, this morning, we're looking at a little bit of a gap up. So I don't know what's going to happen today. The QQQ, let's see where the QQQ is trading pre-market right now. It's up $1, 329.57. So right in here is where it's going to open. Now I see a downtrend. I'd connect these highs and these lows. Looks like maybe a little bit of a channel. So even a gap up 329, 330, even up to 331 early in the morning wouldn't necessarily break this downtrend. I'm more interested to see how we trade throughout the day and how we close. Is this going to be one of those days where we finally start to see some intraday selling? That's going to be a big thing for me today. One other thing about options I'll show you. So here's the sector summary from yesterday. Now, energy, you might look at energy and say, well, yeah, energy's got, one of the highest scooters. Why would that be leading option expiration week? It's supposed to be opposite George week. Well, I can tell you one thing, that scooter score is going to be coming down really soon if energy doesn't get on the ball and start moving higher again. Because when you look at energy on the chart, you can see the top occurred 2.5 months ago. We went down, and yeah, we've rallied, like I said at the open, we've rallied off the July low, but we're still way down below where we were in June. This is one of the worst performing sectors that we've seen, at least over the last 2 or 3 months. And one way to look at this is just to pull it up versus the S&P 500. And then instead of a candlestick, switch it to a line chart. Look at the relative strength. So the scooter scores, which that is one relative strength kind of an indicator, but it's not perfect. And you have to understand how it works. If energy continues on a relative basis the next couple of months, the way it is right now, you're going to see the XLE scooter probably down either in single digits or maybe 10, 20, something like that. It's not going to be at 97. So as things continue to progress, unless energy picks it up on a relative basis, which I do not expect it to do, then you're going to see that all change. But clearly, let me show you the difference between this and, say, technology. See the difference? So technology scooter score is less than energy, but I think it's pretty clear technology is a much better relative performer these past couple of months, 2-3 months. So let's go back again and we'll look at that sector summary. Look at the scooter, sort it by scooter order. There's utilities, there's energy. Where's technology? Way down here. The scooter scores basically look at the last 5 months. And of course, energy had a huge run 5 months ago until about 2.5 months ago. And it's been since then that it's been pulling back. These numbers are going to start to change, and you're going to see a lot of these scooters flip if the relative strength is consistent with the way it's been the last 2 or 3 months. All right, let's see. What do we have next? Let's talk a little bit about industry groups. So I'm just going to go through and point out a couple of these industry groups that I think have really started to show some strength. And unless things change, you should be taking notice. These relative strength charts, they mean that, you might be looking at the absolute chart, and here with restaurants, you can see it's going up, but everything's been going up. So is it a leader or is it a laggard? I just showed you energy was going up, but energy is underperforming. Here, I'm showing you restaurants are going up, and they're going up faster than the S&P 500. We've now got, on a weekly basis, the restaurant group relative to the S&P 500 is now above its 20-day, which is above its 50-day. That's a bullish configuration. The relative PPO is positive. This is all bullish. Until things change, I think you got to be thinking about restaurants. Now, this is one industry group I'm going to show you. And when we get to the 3 you must see at the end, I'll pull up one of the restaurant stocks that I think is starting to look really good there. Another area that I wanted to point out was computer services. This is in the technology area. Now, computer services made this huge run from really March through the end of June. And then when everything started to take off, this group kind of pulled back, but it's starting to strengthen again. And you can see its absolute chart broke this downtrend, has moved back up now to about a 5-month high. And we're seeing the relative strength turn back up above both moving averages. And that PPO has been above the zero line now for about the last 3 months. So there's still bullish momentum on a relative basis, and it looks to be strengthening again. I got a stock in this group I'll show you in the 3 you must see as well. And then the last one I'm going to show you is a group that I believe is as hot as anything out right now, and that's renewable energy. So you can see the renewable energy group absolutely just exploding on a relative basis to the upside. The 20 just now crossing over the 50. And look at how fast we've moved up to over 5 on the PPO. If you go through and you look at all of the industry groups, and I haven't looked at them all, there are 104 industry groups. I'm going to say that this is probably in the top 5 in terms of its PPO, relative PPO. And that means something, because the relative PPO is telling us how quickly the relative strength is building. These are groups you absolutely want to be considering. And later today at 5:30, we're doing our draft at Earnings Beats, where we put 10 equal weighted stocks in each of our portfolios. Both our model portfolio and our aggressive portfolio have more than doubled the S&P 500 since their inceptions by following this simple process, looking for relative strength and then looking for strong stocks within those groups. So I've got one of these, a renewable energy, that I'll go over with you in the 3 you must see as well. Now, when I go through and I pick my stocks, I want to show you in this next segment, chart lists. Really what I would say is our go-to chart list. This is our, the poster child. I don't know what you want to call it. It's just, in my opinion, it's our best chart list. It's the one that without a doubt takes the most time. I go through and I review thousands and thousands of earnings reports. Find the companies that have beaten top and bottom line estimates. If companies do not beat Wall Street estimates as to both revenues and earnings per share, it cannot get on this list. That's the only way. That's the first step. So that's the first filter, and it's a big one. So there's a pretty good fundamental aspect to this chart list. Then what I do is I look at the charts. If they've beaten top and bottom line, then I go to the next step. I look at the charts. Number one, are they liquid? And I'm basically looking for at least 200 to 250,000 shares a day, because we have a lot of members, and I don't want to put a company on here that trades 60,000 or 20,000 shares and have members going in, and all of a sudden our members at Earnings Beats could be controlling the market in that particular stock. We don't really want to do that. So I want to make sure that there's a certain amount of liquidity. And then the third thing is I look at the chart just for the technicals. Is the stock getting a positive reaction from earnings? If so, that might be enough to get it on the chart list. Is it in a group that has been doing really well? So is it if it's a renewable energy stock that's been beating or just beat top and bottom line estimates, knowing what I know now about renewable energy, it's absolutely going on the list. Even if it's in a bad industry group, but it's one of the leaders in that industry group, it's going on the list. So that's the type of thing I'm looking for. But by the time you get this list together, you have a group of stocks, in my opinion, among the very best stocks in the market in terms of fundamentals and technicals. Now, yesterday obviously wasn't a good day for the market, and I pulled this up in summary form. And there were 2 stocks on this list. And by the way, let's take a look at how many stocks there are. 485. And by the way, I'm getting ready to add to it. I'm getting ready to make adjustments to this list today, which I'll send out to members, because I want the most updated list when I go through and do the portfolios, when I draft for the portfolios, because just about every stock, and in this upcoming portfolio at this point, let's change my mind later today, every stock is going to be on this list. So a lot of stocks on this list. But anyway, here's the percentage change negative. But there were, even on yesterday's down day, there were still quite a few winners on the list. But heading into options expiration and max pain, my suggestion to members has been simply to lay low. Be very cautious this week if you're trading. If you're in for the long haul, you stick with the spider, the QQQ, whatever, or if you have your favorite list of stocks, they're probably fine long term, especially if you're sticking with relative strength winners. The Apples, the Microsofts, the Googles, those stocks, are doing extremely well. So, stick with that. So anyway, this is how I'm going to go through. I'm going to literally go through and look at every one of these charts during the day today. And I'm just going to be looking not only at their price action, how they're setting up. I'm going to look at their relative strength. This one was a pretty good leader. This is Cross Country Healthcare. This was a pretty nice leader in the Business Training and Employment Agencies group. But look at the group. The group's really weak. And this one started to weaken against the group. So that's why we're seeing all this weakness. Now, is that the big reversal that we needed? Maybe. I can tell you this one's not going to be in the portfolio. I'm looking for the best of the best. When I pull a chart up, I want it to just jump off the chart at me. So I just will literally be flipping through. This one looks kind of interesting. Clean Harbors. Probably won't do it just because the volume. I mean, normal volume. We've had really strong volume, and that's been 400 to 800,000. I normally pick stocks for portfolios that have more liquidity than that. CVS, that was a nice candle right there with earnings. Continued to push higher. Now Inc. was okay. DQ just kind of okay. Double verify, strengthening. I like that. Edit kind of broken down from where it gapped up with earnings. Not really liking that. But my whole process, I'm going to go through these 500 charts, and I'm going to find the ones that I like the best to put into the portfolios for the next quarter. That's how it all gets done. All right, earnings quickly. Cisco came out. That was a big one. Cisco, actually, let's just take a quick look at a couple of these. So there's Cisco. They beat 83 cents versus 82 cents. Looks like it's going to gap up about 5% today. Synopsys beat 210 versus 204, also up about 0.5%. Keys up $8, almost 5%. They beat 201 versus $1.79. And then one I wanted to show you is Wolf, which is Wolf Speed. Big gap up this morning, 21% right now. Looks to be extending its recent uptrend. They beat they beat on earnings. They still lost 2 cents, but they were expected to lose 10. All right, the three stocks, three you must see. These are from the three industry groups, improving industry groups. From computer services, I really like IBM. It gapped down with its earnings, but it held this recent support area. It's turned back up. AD line looks strong. I see this one going higher. ENPH, this is Enphase Energy in the renewable area. Look at the AD line there. There's your big move. We broke out to all-time highs. What growth stock is doing that in this market? Enphase Energy, that's one. And then the last one I have for you in the restaurant area, Chipotle. I love this big volume breakout, and we have just been going straight up. Big AD line. This one looks good as well. Listen, everybody have a great day. Don't forget to come over to Earnings Beats and join me for this huge event. Sign up. You've got to register to join me. It'll be a live event, virtual, on Saturday, August 27th. Hope to see you there. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.